Hey guys, hope you're well. Jack Corsellis here. This video is going to teach you about pocket pivots. Now, many of you would have heard about pivot points, pocket pivots from the works of Livermore, Mark Minervini's Lower Cheat Entries, but also from Gil Morales and Dr. K in their book, How to Trade Like an O'Neill Disciple, where they talk about pocket pivots. So this video is going to be split into two parts. The first part is going to be showing you a chart of SPWR, which shows some pocket pivots. I can show you on a real life example if you like. This is an example from their book as well. Then in the second part, we're going to be going through a schematic drawing where I can go into some of the nuances of a pocket pivot. So let's jump straight on into it. You can see that there are three pocket pivot breakouts here. Okay, this is back in 2007. So there's one in March of 2007, there's one in June of 2007, then there's one in September of 2007 as well. So what is the point of a pocket pivot? A pocket pivot is basically looking for an area on the chart where price is getting really tight, the volume is drying up, price is preferably pulling into some of the key moving averages instead of wedging up, and it just allows you to take a position in a stock whilst it's still in the base instead of that kind of a standard high of base breakout. So you can see the common characteristics here, certainly with the first two. First and foremost, we have the RS line turning up. You can use this on obviously MarketSmith, TradingView. If you want to use my free relative strength line, you can just search the indicators in TradingView, you'll find it. So if we take a look here with example number 1 and example number 2, we see that the RS line is turning up both times. The second time before the base, we actually have 52-week highs. That's indicating that the stock is a leader. And then we can see that we pull back in here, bounce pretty much off the 100 SMA, bounce, put in this higher low, then price action starts getting very tight around the 10, 21 and 50 SMA. They're going to be the most common moving averages you are going to see if the base is larger. 10, 21 and 50 SMA where the pocket pivot is going to form. If it's a bit of a quicker stock, it could be setting up around the 10 SMA or 10 EMA at a minimum, but you may also get the 10 and the 21 moving averages in there. So then you're looking for the volume to generally dry up as well. This black line here is the 30-day moving average, and then the pocket pivot breakout itself, the volume should actually be higher than the last 10 volume bars, the last 10 trading sessions, if not kind of closer to 15 or so. It kind of depends on the size of the base, but you're looking for volume to be confirming the pocket pivot breakout. So you can see the volume is confirming here nearly about 2.5 times versus the 30-day average, and the volume over here as well. See how you have the increase in volume about 2.5 times the 30-day average coming through. And in both in both instances, do you see how tight the candlesticks are getting? So something to kind of ingrain in your mind from a supply and demand perspective is multiple tight candlesticks with low relative volume indicate absorption of supply and or very little supply is coming to the market. So these are the type of characteristics you'd like to see before each pocket pivot. Multiple tight candlesticks and or bars, and the volume drying up as well. They are very key characteristics. Now, Dr. K and Gil Morales talk about in their book that they would not, as kind of a minimum, they would want to see the stock setting up around the 10 SMA. If it's kind of above that by a significant amount, it likely means the stock is extended and it shouldn't be bought. So i.e. they're not generally targeting a pocket pivot up here. Okay, it's in a developing base. So whether that be a cup and handle, a Davis box, a VCP, a flag type setup, they're looking for it within the base as opposed to more so when the stock is kind of already broken out and trending up like this. So it's a pocket pivot is a way for you to be entering a position in a base, then potentially you could be looking to add on a base breakout if another pivot point sets up. So that's kind of the general scope there. You can see a couple of examples. If we go into this kind of schematic drawing, I can go into the weeds a little bit more, talk about some sell rules as well. So we'd like to see the stock in an uptrend. Now I'm just taking it as kind of a given. If you understand their background and kind of trading for O'Neill as well, they will be looking for the liquid leaders, the stocks which are displaying many of the CAN-SLIM criteria: big earnings, big sales, very liquid, institutions in there, so on and so forth. Stock is in the context of an uptrend, should be showing impressive relative strength. So what I've drawn here is a stock in the context of an uptrend that pulls back down, finds supportive action on this purple line, which we're going to call our 50 SMA. Then it bounces, pulls back in again, finds support again on the 50 SMA. This is something that you will see commonly as well. Bounces, and then it starts getting really tight in here. And for the purpose of this, look how our volume then starts drying up in kind of the pocket, if you like. So we've got the volume drying up in here. We've got tightness in price. If we were using this as an example here, if our if our pivot point entry is going to be somewhere around kind of around $99 roughly on this chart here, let's say it's around $99, we could then be placing our stop loss underneath the 50 SMA, underneath the recent lows. I like to look for trigger bars as well. That's a really tight candlestick in terms of the real body, the overall spread, and the volume dries up below the 30-day average. Just an indication to me, very little supply is coming to the market. We've also got the 21 EMA in here, so the 21 EMA is caught up, so we can be placing our stop loss underneath the recent low, recent contraction, underneath the 21, underneath the 50 SMA as well. So our risk on the trade then would then be around about 3.5%. Now what I've tried to do here is with this orange line draw kind of the cup and handle. So oftentimes you can get the pocket pivots as the cup part in the cup and handle is actually forming. So kind of then on that transition out of the cup, and then as the handle starts forming, handle is then commonly a Davis box, a VCP. Okay, what it can do is just enable you to start building a position in here and or take your entire position in here, instead of trying to target that kind of higher base breakout. So then the stock pulls over here, starts building a handle. So then this is an opportunity to then potentially be adding to your position. Now the sell rules that they talk about in the book, these are guidelines. My interpretation of the book is if the stock doesn't close below the 10 SMA for the first 7 weeks, exit on the first close below the 10 SMA. If the stock closes below the 10 SMA within the first 7 weeks, then sell on the first close below the 50 SMA. So at its heart here, in terms of the sell rules, it is actually a trend following strategy. What are they trying to do in terms of Gil Morales and Dr. K? They are trying to target the leading stocks as they are building bases, establish positions, and then ride with these sell rules here, actually kind of ride the intermediate term trend. So that is a combination of the 10 SMA and or the 50 SMA as well. So that is it, guys. I will wrap it up there. Hopefully that video there was helpful. I know it was fairly short, but it isn't overly complex. It's just about training your pattern recognition skills, understanding some historical presence, studying the ones which have been most successful, understand those repeatable characteristics of what makes a very good pocket pivot. As I said, then it's just a case of training your pattern recognition skills, then finding those setups. I really hope you guys have enjoyed that video, and I look forward to seeing you in the next one.